Let's look at effective rates and TVM calculations. Now, this is my second time going through this. I messed up on the first example, so that's why this is already highlighted. So that's what's going on there. But let's take a look at this example. Katie has a current balance of $22,000 on her TFSA. She earns 4% annual rate of return compounded monthly. She contributes $6,000 at the beginning of each year. How much will she have in her TFSA after 20 years? So the tricky part about this question is that her interest rate is annually, but it's compounded monthly. So we're going to have to calculate her actual interest rate. Okay, so here's the solution. So as I've already highlighted, the present value of her TFSA is $22,000. And that's a negative because it's cash flow out of Katie's hands to her TFSA. We'll do the interest last year because that requires some calculation. So we'll go ahead and do the time period is 20 because it is 20 years. And her payments are yearly $6,000. And again, they're negative because it's money leaving her account, well, leaving her hands into her TFSA account. And the future value is, I don't know. We'll figure that out. And we'll use the beginning mode because she is adding that $6,000 at the beginning of the year. So make sure you have your calculator set at the beginning. I'm actually going to go ahead and do that right now because that is a step that I forget. If I'm going to forget a step, it's going to be setting the mode. So so there's nothing on here now. So that means we're in the end mode, and so let's set beginning. So it's second function and the future value key, which is also the beginning end key. And now we have the BGN there, so we're in beginning mode. So we're good to go. All right, so now for this interest and how you calculate the interest on your SHARP calculator, how you convert it. So the interest needs to be converted to the effective annual rate to account for the compounding periods, right? Because it's in the nominal 4% per year, but it's compounded monthly, so we need the effective annual rate. So to do that on the SHARP Professional EL-738XT calculator, you will first clear it, second function alpha 00. And so it's the number of compounding periods per year, and it's compounded monthly, so that's 12. And then you hit this XY key right here beside the enter key, XY. And then it's the nominal percentage rate, which is 4. Type in the 4. And then we can convert it to the effective annual rate by hitting this second function button. And the PV button, which is actually the button that we want, is the effective rate button. So that's the PV. And so yearly, her interest rate is going to be 4.0742. Now, it's a little bit higher than the annual rate because it's getting compounded every month. So there's a little bit of interest that's getting compounded in with it. That's why it's a little bit more. So while it might not seem like a lot over time, the difference will add up. So that's why we want to be able to calculate it as accurately as possible. So let's go ahead and finish the calculation. So now that we know what the interest is going to be, we'll go ahead and do the TVM calculation. So it's minus 22,000 present value, and the interest rate is 4.0742 interest. And then for 20 years, 20N, and the PMT is minus 6,000 PMT, and compute the future value. So in 20 years, Katie will have a balance of $236,283 in her TFSA. So that's assuming her 4% annual rate, compounded monthly, and she keeps contributing $6,000 at the end. At the beginning, of each year. So that's how you calculate the her balance when you have to convert the nominal rate to the effective rate for interest.